By popular demand, I decided to do an update on HIMS and HERS Health. A lot of you guys been asking me for the last few days, please give us an update on HIMS and HERS Health. This is by far the craziest stock I've owned, and people are just freaking out about it. You know why? Because the stock went up from being around 122% on the month, now it's only up 66%. I mean, come on, guys. Why is everyone so upset? Why is everyone going crazy on the stock that own the company? To me, I couldn't care less. I'm looking at the balance sheet, I'm looking at the fundamentals, and I'm looking at the long-term vision of HIMS. I did not buy HIMS at $7 to sell it at $50. I bought HIMS to sell it at $500 or $600 per share over the very long term. This is the reason why I bought it. So I'm going to talk about it today, let you know why the stock is down 19%. In the after hours, 19%. To me, this is absolutely crazy. But again, guys, I would not be surprised. And even if we go down 20 or 25%, I mean, again, the stock is still up 103% year to date. We're still in February. Like, come on, guys. Sometimes we have to adjust our expectations. And people have been crying about the stock just because they missed out on 20 or 30% gain and they didn't sell it earlier. I mean, imagine doing that when the stock was at $10 and selling it because it went from 7 to 10. I didn't sell it then, and I'm not selling it now, because I'm a long-term investor in the company, and I couldn't care less. But I always say that everyone is a long-term investor until their stocks go down. Then when the stock goes down, they start panicking, and then you cannot find out. But the company did very well on earnings. They beat on earnings per share 11 cents versus 10 cents expected. Revenue $481 million versus $470 million. I was very pleased with this report. Subscribers grew 45% year on year. And I hope you guys again listen to this video, especially the people that don't own the company, because that might be the last time you might get some kind of a chance. The report is amazing. I'm just letting you know. Revenue was up 95% in Q4 year on year. Absolutely insane. And the most important part is the whole thing with GLP-1 and the semaglutide kind of shortage, which was fixed, and how will the growth look like for the company. And many people believe this is just a GLP-1 company. Well, this is what the company said. They said in 2024, revenues grew 43% year on year to 1.2 billion, excluding contribution from our GLP-1 offering. So it grew 43% without GLP-1. This is not a GLP-1 company. I mean, it's 43% without GLP-1. This is insane. And I'm going to talk about it a little bit more. The monthly revenue per subscriber was $73 per subscriber, up 38% year on year. And this is something I'm going to show to the people that tell me this is just the next Teladoc. Teladoc was hyped up and the stock went down 90% and it never recovered. Teladoc's revenue per member is $1.36. HIMS revenue per member right now is $73. The main reason for that is Teladoc is within insurance. A lot of their profits are capped. They can't charge certain things. They cannot monetize subscribers the way HIMS and HERS Health could do. So please stop calling HIMS the next Teladoc. And again, you know, it's funny how everything is right now. And the shorts are celebrating. They shorted the stock at 25. Now the stock is at 41 and they're celebrating. I don't know what kind of celebration is that. I just wouldn't be celebrating. Adjusted EBITDA has been increasing steadily. It has slowed down over the last quarter or two, I have to admit, and it's not too bullish, but the company is still in its early stage. It should not be focused on its profitability. It should be focused on reinvesting in the brand, in sales and marketing, research and development to grow the company, establish a moat, establish a competitive advantage. And the company did put up some long-term goals for 2030, which is 20 to 30% adjusted EBITDA and gross margins of around the mid-70s, which is well known. The company has been talking about it for a while. But this is an amazing chart that I'm going to show you. And this is the repeat customers for HIMS. You could see, I don't know the exact amount, but pretty close to 35 or 40%. So around 40% of the total members of the total revenue is from repeat customers, which is key with a business that's so focused on marketing. HIMS does spend a lot on marketing, and it's actually retaining 35 to 40% of those people. So a lot of the money they're spending, the profitability that they're sacrificing, it's not going to waste. A lot of those members are staying and they're referring their friends and families, and they're staying within the HIMS and HERS Health ecosystem. And this ecosystem is expanding. And the second thing I'm going to show you, which is a mind-blowing chart, is the updated market share of HIMS and HERS Health. Because people always say, what about Amazon? What about those companies? Any player could just come in and create a website and replicate whatever HIMS and HERS Health is doing. And that's what I'm going to explain in details in this video. But HIMS has a 47.3% market share. BetterHelp, which kind of competes with HIMS on the mental health kind of things, is only 11.6%, and HIMS and HERS is 47.3%. This is insane for the company. And the ecosystem and their products are expanding. Now they're getting into liraglutide, I believe that's how you pronounce it, in 2025. And that's going to help a lot in terms of offsetting the potential loss from semaglutide weight loss kind of stuff for HIMS and HERS Health. The second thing they acquired, which is a game changer, is at-home lab testing, which they can test things at home, and they can get a lot of that data, and they can monetize the data, kind of like Tempus AI is doing. HIMS and HERS Health could do the same thing, and they can use it for clinical studies. They can use it for other things. This is, the CEO said it, that this is a data business over the long term, and that could be a game changer for the company. And most people don't really understand that. Now, in terms of guidance, for Q1, they have 87 to 94% revenue growth. This is mind-blowing. I was not expecting that. And from the Super Bowl ad, looks like they're going to get around 94%. This is insane for the company. For fiscal year 2025, for total year, 56 to 63%. The analysts, they were expecting 42%. They're putting up 56 to 63%. And this is all after the shortage is over. So the shortage is over, and the company is still growing 60%. This is insane. I mean, I don't get excited about stocks too often, but this is amazing, and I can't believe how misunderstood the stock is. But this is amazing, because now this is all over. It's all gone. Worst case that could happen from here is they get a lawsuit from Lilly or NVO or whatever, and then it's going to be over. Like, there's nothing else. No more selling HIMS because they might take it off the shortage list. No more multiple contraction because the revenue is not predictable. Now the revenue is finally clear. And this is what a lot of people are not understanding, that this is it. Like, I think the worst is behind the company right now, and it's going to get much, much better. But the most important thing about their guidance is they said, our expectations is that weight loss offerings such as oral solutions, which is the pills I told you guys about, liraglutide, which is coming in 25, and personalized semaglutide will contribute at least 725 million of revenue in 2025. Now, out of the 2.4 billion, 725, this is like 35% of revenues for weight loss. But weight loss isn't just the semaglutide. It's liraglutide, which is coming in 25. It's also the pills. So if I had to guess, the percentage of the semaglutide is likely around 10%, 10 to 15%, and the other 10 to 15% are likely coming from the oral pills and from potentially liraglutide. And this is, which is amazing, that only 10 to 15% is from compounded semaglutide, which is different from semaglutide. And that's what I'm going to try to explain. And this is what the CEO said. But before I get into what the CEO said, the biggest misconception is that because semaglutide is no longer on a shortage list, that means HIMS can no longer sell it. And this is true. HIMS can no longer sell it just the way it is. They would have to modify it as a personalized treatment. This is why HIMS got into semaglutide from the beginning, and they did not get into something else, because semaglutide does normally have a lot of side effects for many people, and HIMS can help those people by modifying the dosage, adding certain ingredients to help with their side effects. So whenever you go on HIMS and you fill out the form for weight loss, you list your side effects, you list if certain things, maybe they make you lose sleep at night, or you have certain family history, and look at all of that stuff, and the AIs, they analyze it and they send to the doctor. And the doctor, they make a certain, a portion of the semaglutide that's just for you, personalized for you, that you cannot get it from the flagship product of Lilly and NBO. And this is a big difference. And because it's personalized, because it's different from the original kind of product, HIMS will still be able to sell it after the shortage is over. After the 90 days, HIMS will still be able to sell it. And this is what the CEO said from his Twitter. He said, "We never chose to compound tirzepatide, even though it could have been profitable. Why not? In part, its wide range of commercially available dosages support a lower side effect profile that reduces the likelihood an individual will require alliteration to meet their needs." So the main reason they didn't even compound this, because they couldn't improve it, they couldn't add anything on it, they could not make it into a personalized prescription. And this is what they said. He said, "We do compound semaglutide. Now that the FDA has determined the drug shortage for semaglutide has been resolved, we will continue to offer access to personalized treatment as allowed by law to meet patients' needs." And this is the big difference, is if someone has side effects from that stuff, HIMS will be able to adjust the dose to fit the patient's need. HIMS isn't just taking a product and selling it over the counter. This is what you guys are not understanding. A lot of you guys believe HIMS is just a website, they just take the product and they sell it. This is not true. HIMS personalize it for you to reduce your side effects. And this is why they will still be able to sell it after the shortage is over. But even if they were not able to, this is like 10-15% of revenues. And they grew 43% without it. So this is amazing, amazing stuff. Again, I'm very surprised. In terms of the market cap right now, after the 19% decline, HIMS is trading at an $8.9 billion market cap. For sales in 2025, it's around $2.4 billion. So $2.4 billion expected in sales. We get around 3.7 times sales for 2025. So HIMS right now is only trading at 3.7 times sales. You have companies like SoFi, they trade at 6 times. Palantir trades at like 75 times. I know they're different companies, but those companies are not growing 60% revenues next year. And they're not going to go 40 and 50 and 60% the year after. That's just the way it is. So HIMS is, it's just looking amazing. And the company is going to be extremely profitable over the long term. But I did tell you guys how I value the company. I still believe they're going to get 10% of the market share of telehealth by 2033. Now the company has 46 or 47% market share. So we're expecting Amazon and the competition and all that stuff. And let's assume they do get a 10% market share. This is 46 billion. We time it by 3 times sales, which is lower than the company's current multiple of 3.7 times. This is around $138 billion. The current market cap is around 8.9 billion. This is pretty close to, like a 16x over the next 5 years. And if you want to take more conservative numbers, which I did in my previous estimates, I believe it could most likely 8 to 9x by 2033 on a conservative estimate. And that's how I look at it. Now for HIMS, I personally believe, the stock might continue going down a little bit, but from here, the company should not be trading at 3 times sales, growing sales 90%. It should be trading at least 5, 7, even close to 10 times sales, especially in this crazy market. So I believe the stock is undervalued. I believe it's looking amazing. In terms of its setup, as the closer you could get to $30, the better for a lot of you guys that don't own the stock. For me personally, I sold put options before earnings. I pocketed 16%. I only get assigned if it gets to $25. So I got an amazing deal on those put options. And I'd love to buy the company at 25 if I get assigned. But that's how I look at it. I like the stock. Do your own research because it's a volatile one. You need your own conviction. If you cannot borrow conviction from my videos, so you have to do your own research, and it could be wrong, But for me, I'm holding it and I'm selling put options, profiting from them, and I love it. So that's just my opinion on HIMS. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.